Hey guys, welcome to episode 4 of Hot Questions, Quick Answers with me, Alexander Jarvis. Now, if you are fundraising and you're stressed about all the questions that they're going to ask you, we've got you covered.
Ask Alex. Ask Alex. Because you don't know what you don't know. And if you don't know, now you know.
Yeah.
What are your milestones for the next round? Unless this is your final round of investment before you go to IPO, there is always another investment round. Fingers crossed. The next round, investors will want to see that you achieve key milestones which adhere to their heuristics and market benchmarks. Of course, you are building a business to make customers happy, but you're also building a business which is attractive to investors. The danger is that you act like BP and focus too much on investors. The earlier the stage of your startup, the more your focus will be on milestones, which are thesis-based, essentially in or validating something. This may be illustrating that you can ship your MVP, basic product market fit, come up with some basic metrics such as acquisition costs through certain channels and are they scalable, etc. Later stages such as Series A and Series B are much more about numbers. Your milestones, therefore, become much more financial, much more tangible, such as the growth rate of your revenue, the number of customers demonstrating cohort-based retention. The milestones, therefore, are a function of both qualitative and quantitative indicators rather than strings storytelling. The larger you become. Do not have too many. You need to be focused. Only talk in terms of high level. There's always like a rule of 3. If they want to get into more detail, you have that backed up, but just share the high level. Being unfocused is never a good thing unless you are a competitor. So get really clear on what your core milestones are that you need to achieve. Trust me, you will be dealing with these with your investors, and them doing the pro rata or maybe leading your next round could potentially, well, it is going to be based on whether or not you're going to hit these bad boys. And if you knock them out of the park, boom, right? You're fundraising earlier. If you're not, you're going to have an interesting discussion with other investors as to why your current investors are not investing. And that's called negative signaling. You don't want that, okay? So how would you answer this question? Right. Our milestones are a combination of qualitative and quantitative figures. Let me start with the qualitative ones. Internally, our KPIs are the following. ACSOI, it's a joke from Groupon. Groupon made up their own number for their IPO. Let's look into it. MRR, MRR churn, and MRR growth. These are the things that we track daily, weekly, monthly, as well as other cohorts. Every person in the company knows what these numbers, and they are measured on them. Through discussions with investors, we understand for Series B that they want to see us with an MRR of $1 million and a growth rate of approximately 40% month to month. Naturally, it's easier to get the MRR numbers if we have low churn. We target under 2% monthly. Our qualitative milestones in 12 months' time following the closing of the round are therefore 1.2 million MRR, an average 3-month trailing growth rate of 30% month to month. Qualitatively, it's critical for us to be competitive so that we're able to close these deals with Yahoo, Microsoft, and Facebook. For us to be compelling investment proposition at Series B, we need to get these deals done. Part of our funding is to hire 3 people in our business development team who we've already got lined up, just waiting to sign on the line that is dotted. And they're going to help us get there. Do you think these make sense? Okay, guys, this is a little quick one. Every single milestone for your business is going to be different from person to person. So you have to think yourself of what is actually that you want to achieve. All right, these need to be lighthouses, like real key things that you're going to focus on. It can be to do with your product, how you're building the technology, key hiring roles, growth rates, expanding into new countries, saying that you're going to prove that we can expand into a non-domestic country, or establishing yourself truly as a leader in your home market. Whatever it is, think about them critically, how you're going to demonstrate those investors and that you can actually achieve them. If you've got any questions, sound out in the comments below and I'll be happy to answer your questions, and I'll check each and every single one. If you have got a crappy pitch deck and better things to do, head over to perfectpitchdeck.com, where we've got clear, transparent pricing, and we just get your fucking pitch deck done. Peace, guys.